All right, good afternoon, everybody, and welcome to the Bookmap Academy meeting. Every Thursday, we go through your trades. This is the whole gig here at the Bookmap Academy. You will need to sign up for it. It is free. There's no cost to it. In fact, you don't even need to have you will need to have Bookmap, but you can have the free version of it, and you actually mark up charts from that. Depending on what markets you're looking at, then you probably need to get the paid version. But if it's just crypto, then you could do that. The Academy, for more information on it, just click on the More button up here, and then under Community here, see Bookmap Academy. Click on that, and you can go through here the steps and what you get. You can get Bookmap for free as you make it through the process. You can get add-ons for free. You can get data for free. You can become a coach. You can become a streamer. As long as you continue to make high-quality journaling and trade markups, then that's it. That's all we're requiring for you, from you. All right, so you might have heard about this already. We sent out the digest yesterday on the Bookmap Desk competition. You take a photo of your desktop, your workspace, your setup with Bookmap on it. You can win $1,000 plus 1 year of Global Plus with one exchange of data. And there's a runner-up prize as well for $500 and 1 year of Global Plus. You can take a screenshot there with the QR code of your phone and find out more information. Our Bookmap Academy process, this is what we go through. What's moving the markets? The impetus. Number one, where are your key levels? Number two, then developing strategies and scenarios around those key levels. And then finally, it comes down to what setup are you going to choose? Then you go through your checklist, you grade your setup, you determine the risks that you want to put on, and you execute due to the insights from the order flow and manage your trade. All right, so that's the process in a nutshell. Everyone, typically what we're looking at in your trade markups is number 4 here, your setup. And we're going through that in detail. All right, now Bruce's pilot program, this is something, it's kind of a subset of the Bookmap Academy. It's highly focused. It is different. It is on building an edge, because this is the number one thing that I have found most traders are lacking, and it is the number one, is the first step. You should not be trading unless you have an edge. If you have an edge, you can begin trading. We have a process in here to build out your edge. You'll learn how to do that, and you'll have an edge for yourself. If you're interested in that, it's also here. You sign up on the website, on the More button up here, click on that, and then right underneath Academy, you'll find Bruce's pilot program here. And then you can sign up in here. Now, for this, you will need to have Bookmap Global Plus in order to partake in the Academy, the pilot program. All right, let's get into disclosures and then jump in. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, guys, so let's see. Welcome, coaches. Welcome, everybody. We've got John. We've got David. And we've got some things from Moby, and then let's invite some of the pilot program coaches up to the stage as well. And then let's see here, we got your key levels here, John. Just a second. Hold for your David, I'm sorry. So we have T. James. I don't know if T. James is in here.
Can't see him at the moment, and I've also got Daniel.
And
I don't see him either at the moment.
And let's see. Moby has a few people in here which might be in. And then let's see what John, your PDF. God, I thought I brought it up. What is it? Oh, maybe I downloaded it. Right. Okay. Yes. Okay. 2. Okay. All right, and let's see who is in the room here. Oh, John's not speaking to us because he's not on the stage. What happened?
Had trouble getting on. Sorry about that. The damn Bookmap program hosed my computer, so I had to reboot. But I'm here.
Okay. Okay.
Yeah.
Let's see. A few of the guys I have are in the room, so we might even have to start there. And let me invite DNT up to the stage. And I don't see Trading This Live. He usually comes in a little later. But we also have Vinfra. So you have Vinfra, John. So let's get him up on the stage and take a look here. Okay.
Do you hear me?
Yes, welcome.
Thank you.
Let's see.
Oh,
well, why don't
yes.
you walk us through, and you and John, John can give his feedback here on some of your. Let's hear what you what you thought about this trade and your decision making.
Yeah. I put my grills. Okay. Yes. So I had an horizontal structure. Thank you. Thank you. Then the impulse move, the number one. Okay. And then it's a little bit. It was a little bit confusing. I didn't really know what happens there. And I see this structure that form. It's not a double top. It's a triple top, and then the price. The sellers come back and put this thing in the low volume node that I spotted, and I see this liquidity there in azul that is skew marked in blue. Yes, sorry, in azul. Spanish. I speak a lot of languages, and I'm lost. So yes, this was for me a kind of a push of the buyers upside, but without any success. The price come back in the low volume node, and when this structure is broken, I decide to enter.
So when it broke
So
here,
we see,
you entered here.
Yes, when they broke here, yes.
Gotcha.
I see this impulse move that broke the structure, and I catch it on the fly, and I spotted I target the liquidity of 67.80.
Beautiful.
As I have my my stop and my take profits setup. If you can see there on the left, I have a stop loss of 12 ticks and 48 ticks on the take profit. It's my way to do it the quickest as possible to change my setup, my setup of the take profit. That's why you see that the take profit was a lot higher, and I put it on the level that I was watching for. Yes, there. And it's normally the same with the stop loss. The stop loss, I have 12 ticks, so 3 points, and I move it as I said last week. I think I put the stop in reality where my setup is wrong. So normally there, it's just at the bottom of this low volume node. You just there, yes, what you have, yeah. So I put the stop there, and I did not have the time to trade. I did not. I did not need to trail my stop because it was so quick. I think it's 3 minutes, something like that. I enter at 9.6, something like that, and I'm out at 9.8, 9.9, 9.8. Yes, so 2 minutes trade. And okay, so the low volume pullback, it was a little bit strange for me. The structure is a little bit strange. It's not a wedge, it's not a flag, it's not it's not anything that that I know. So I was a little bit confusing. But as I saw the volume of the buyers and this impulse move broke this structure, I decided to come in. Yes, this is the volume of the impulse move. And the volume during this kind of volume pullback is lower than the other volume that the impulse move. So I decided to enter when this structure is broken.
Okay. Coach John.
Okay, so the first thing he does is he recognizes the horizontal structure, and then he sees the breakout of that structure, and he sees it with both price advance and volume in the volume delta bars. So that's a great way to identify that as being a true breakout, right? Then he comes back down into the low volume node. I added a note there that saw the skew. What I didn't understand, and I put a question mark on what you meant by liquidity pushing and exhaustion. I'm not sure what that meant. But
yes,
you know, and then you saw the volume come into the market with the volume bars and your entry. So I think everything was great. The only thing I would have done differently, and I do this a lot, don't mind, you know, getting in where you did. I would just pull that stop up really close, because on this kind of a breakout, I want it to continue going. The last thing I want to do is drift back into your stop. So for me, as soon as if it just started to pause or started to come back a little bit, I would want to be out of this trade, because I'm trading that impulsive move that you clearly recognized here, but I wanted to keep on going, which it did. I just would have been a little tighter with my stop. I would not want that to drift back into the range and challenge the stop loss down there. But everything else I think looks great. I just would like to know a little bit more about what you have there labeled as your number 3, liquidity pushing and exhaustion.
Yes, I didn't know if that was a skew or I did not really recognize the skew. So for me, it's a kind of skew, but we have some liquidity below, and they seem this liquidity seems to be more skewed than this one, and I was a little bit confusing with this.
Well, I think the significant part as far as liquidity is that you have a lot of liquidity stacked above, and that's great. That's great for this trade setup. In fact, I think that was the first thing you recognized. You saw the structure, you saw the breakout, and you saw this massive stacking on top. That's great. And now you're just looking for an entry. So well done.
Yes, yeah. I mean, we have something to target. If there are nothing to target, there is a problem.
Yes, sir. Absolutely. Absolutely. Bruce?
I'm going to turn it right over to David.
Thank you. Thank you. Good morning, good evening, good afternoon, everyone. Great charting and nice write-up by John. So well done, well done. So echo everything said. Where I feel there's some great clues here, Bruce, if we look to the left, if we look in the horizontal structure box, and we look in here, and we look at the volume bars, and as you rightly pointed out, Bruce, the volume dots, there's already clues there that we're either, I'm not sure what happened on the left not in shot whether we'd come down here, or we've ranged a bit, or we've pushed up and we're pausing. But those little green bars there are already giving us clues that something is on the boil. And then we got a little red one, which is less than those green. Thank you. And then we start to put, pedal to the metal. Now, of course, that's where David starts to get in, Bruce, as you know. But we're getting those lovely little signals there that something is happening. So keep an eye on those. Do the setup as you've done. That's brilliant. But look for those little tells there. It's not just a structure to me. There's those footprints and fingerprints there, Bruce.
It's in transition yet.
Yes. Yeah.
I see that a lot in the pre-market. I mean, it's just before the open. So that happens a lot, I see. Yep.
Yeah. And what I do, and it's on my, if we do get through the ones I got this week, it's my usual line here, Bruce. Now, I appreciate it may not quite low. If we were drawing a line from the far left of the horizontal structure, from there, if we were trying to draw a line across, Dave is trying to desperately trying to find an incline that's going up a little bit, and that's what I'd be starting to chart. We've seen that a lot today. We see every day, and I say every week, where the price can scoot up or scoot down, and then just start drawing those lines. Bruce, you'll have to remind me who we've got to give credit to. I remember years ago, Yuri be on about it, Moby be on about the drawing tools in Bookmap. They are really great to use, really simple to use, and I love the way the pen stays on until you turn it off. But that's what I'd be doing. Look at those green volume bars, start drawing a line there just to get your mind going. And as soon as that price scoots up as it did at sort of 857, as you've got the sort of 45-50 degree going up through one, draw that as you're trading. That's it, Bruce. Draw those lines as you're trading, just to help you out.
Okay, thank you.
That's me done.
That's a nice nice one, David, to hear, like kind of training wheels. So guidelines there, or what do you call it, on the highway, the
sort of stabilizer wheels, or
the guide rails or whatever,
guide rails.
I forget what you call them,
armbands, swimming armbands.
Let's see, D&T, I'd pass it over to you, but I'm going to forget. I got a couple of things in my mind, so let me go, and then you can jump in. There's a lot of things that you'd mentioned, Vinfra, that I want to address, and then some of the things that John said too. You said this structure doesn't look like anything you know of. It's the structure. It's proper. I mean, it came up to here, right? And to me, it looks like it really is ready to go here, right? And go like that. And maybe it does this, and then it still looks like it wants to go here to me. And this is just kind of a wicked little move here. And one more kind of move down to the bottom. See the swing here? See the low volume node? This is why we put in the low volume node, because it's trying to stay here. Let me get this tool here. It is trying to stay above or in, and then above the high volume node here. It retests down here. There's a skew, like you said, and we see some selling at this little swing right there. And then this is why I put it into the setup. It's number 3 up here, that we're looking for something here. Absorption, exhaustion, trap volume, liquidity skew. If I had enough room in here, I would have also put in stop run. Hit the stops. Then above this area, above where those sellers came in, you can even see it retested right here, like very small little area right in here. Now your entry is fantastic. If you even waited until, because this is not quite enough in here, this is telling you something though, and we're at the top of the range. It is ready to go now, and it's tested here. It rejected here. Okay, so that's why we put in the low volume node, and that's why we put in this stuff in here on number 3. So don't worry about the structure. It's about the concept of all of this in here, in this example. And the context is also here that you noticed. It's all low volume on the sell side. So this you got it. Just look at the bigger picture here. Impulse move, and all of this gobbledygook in here, and this back and forth, and this chop in here is a kind of a distraction. What we want to see is, well, I would have been probably trapped in here. I am trying to get in the habit of getting out of this and waiting for this and then getting in. But you know, it just looks so much like it wants to do it right here to me. Anyway, this happens all the time, and this is how we take advantage of it, just like you did. So that's one thing about the structure, and the other thing is, well, you can see here's even another little one here, right? And then about this structure down here is, and I just want to point this out because David was getting alluding to it too. This structure here is pretty much the same as this one here. Okay, so look what it did. You know, came up here, chopped around. We see the buyers starting to pick up, just like in here, right? And look, buyers pick up again up here, right? Just like up in here. We get one more push, one more test down here. Then the buyers come. This is a deal. The buyers come in. It's ready to go. And then we get the impulse move. You know, I just wanted to cover that because you'll see it again and again and again. These things repeat, and the more that we can understand and see these things in here, and that kind of context, the better you're going to be. And then everything else that you played just beautifully in the bigger picture here. So the targets up here, front running it, moving your stops, etc. I'm still, for me, like, I don't know. I'm finding I don't want to put my stop there. I would probably keep it down here. I know that John mentioned like he would either move it up here, or heck, even after it starts to clear here, he might even be up here. I don't know.
I would. Yes.
You would, okay.
Would.
Because you're looking for this to move now. If
Yes,
if it doesn't move now, then just get out.
I went out.
Yeah. And just take the next one, and it'll happen again. I mean, it happened again up here, you know, a minute later. There's 3 different ways of moving your stop. The way you did it, the way that I would probably do it, keep it down here, the way that John would do it, or maybe even David, up in here, very aggressive, very tight. It's kind of up to you. So I'll turn it over to DNT. Actually, DNT, I'm sorry to put you on the back burner one more time, because the stops is something that Trading is Life is, I'm sure, will want to address at the moment. So Trading is Life, I don't know if you have a comment on this.
Yeah, good afternoon, everybody. I do. That's my thing. I love talking about the stop.
I know it.
It all depends what kind of account you have. If you have a prop firm and you have that trailing drawdown against you, you have to be aggressive because it's gonna work against you. But I would put my stop right where John said he would put my his stop, because because I do trade prop firm, and until you pass it, that trailing drawdown, it's a big issue. But if you're trading your personal account, I would have give it more room. I'll put it where you placed it, Bruce, because you won't be punished for that. But other than that, I think he traded that trade very well. Excellent. His entries was perfect. Where you were just talking about, where it was basically zigzagging back and forth. Frederick, I just say that's like noise. Don't pay attention to that. That happens all the time. Like Bruce said, it happened below, then it happened again earlier. I mean after. So those are just noise. I don't really pay attention to that until it hits a key level where I see that the resistance or but that's all I have to say. I think you executed that trade perfectly. It's just that my stop loss would have been a little bit tighter on that trade. And that's it.
Okay, thank
Okay,
you.
thank
Trading
you.
is life. DNT, please.
Oh man, no, you guys are great. I like what John said about that stop, because he likes entering on the breakout, and David as well. And I know Bruce, you mentioned in this setup number 4, you're looking number 4 on the checklist. Small structure break on impulse move and high volume. So I assume that number 4, you are also entering where he entered as well.
Pretty much, yeah. Yeah.
Okay. Or and you're not really entering like at 6773.25, right? Like on that small minor pullback, or maybe even at the break high of that little swing high right there. Let's say 6774. Yeah, like right there, maybe somewhere around there, right?
Yeah. I mean, that's a little. It's still in my book. It's still not. We're not sure. But the one thing I do. This is a little. It's kind of, we haven't mentioned this before too much, but since it auctioned here and failed here, then it's likely to come back up here in my book, in this example, because we already have the impulse move and we've got trades up here already. So I would look for it. I don't know if I would take this or not here for sure.
Okay. I do like this. That is helpful because number 4 is a bit obscure sometimes in different replay files. I noticed, and that's okay, and that because that's normal. That's normal. That's how the market is. It's random, and sometimes you don't get it. You don't get it how you really kind of how you want it. I do like that entry at 74-ish because you have the sellers trying twice. You have the sellers trying at 6772.5. They try it and they couldn't get it. And then they try again at 70. Yeah, right there. Then they try again and then you break above it. That's they're trying to push it down and they couldn't push it down. So let's say you entered right where you drew that last line, 74-ish. You can actually have a better, if you entered right around there, and I know it's hard because it's so vertical, but you could put your stop at you could put your stop below that structure, that previous swing low, like where Vinfra wanted it. Really, ideally, I'd put mine where you wanted it, Bruce. About a point or so below that structure. Yeah, a point or a point five. Yeah, like 1.5 points, like somewhere around there. If it breaks that, and I know that's who is it? John doesn't really like that type of stop because it's a lot, and it is kind of a lot. But he's looking at the breakout entry. So I see 2 entries. I see the one that you talked about, that we just talked about. Then it gives you some room for that stop that we just put down. And then there's the breakout entry, which is the one that Vinfra took. And then I can see that tight stop. I can see that tight stop here working out because you're going with momentum. You're not really going with the pullback, and you're not going with the pullback trade anymore. You're going with the momentum, a breakout trade. So I can see that tight stop that John was talking about. So it really kind of, I could see both, just to kind of depending where you get your entry at. And you might not be lucky to get the lower entry. You might just, and if you get the later entry and you get that breakout entry, then you might have to tighten your stop because if it breaks that, then it'll probably come back down on you. It's like you said, Bruce, I think, where if you got stuck out to the left, if you got stuck in that noise, in that chop, and then it comes back down on you, and you'd want to look for a re-entry. So you'd really have to you'd have to take that stop and then wait for it to come back down and then look for a re-entry again.
Yeah.
And that's really, and that's kind of the hard part about it. And then you really have to decide how you want to trade. Are you going to be the trader that's going to enter twice, or are you going to be the trader that's going to maybe enter once? And if you're going to enter once, where do you want to try to get it? What's a bargain to you? What's your target? Where's your stop going to be at?
Yeah.
I'm the type of guy that might enter twice too, but it is painful sometimes, and can hurt, especially if you take 2 losses right there.
Yeah. It's true, and D&T. I mean, that's the whole idea of the pilot program is to kind of burn through the replay mode, just like what Vinfra is doing here. So learn here, learn from others, learn from doing it yourself many times over. Replay this same file and try all 3 or 4 of those stop or entries and see how you like it. So this replay file here, you could have played, or just this part here, you could replay 4 or 5 times, maybe even more, and you can learn that, and you can learn that probably in about 20 minutes, and that's the beauty of this pilot program, is that's the quick path here and the method. So I encourage you guys to replay it again and again. Tomi, I don't know if you're doing that, but others as well. Like, just keep on replaying it, playing it again, learning from it, doing it a little bit differently. Think of it like a cheesy analogy or something, like you're playing guitar or something, and you're playing a riff. Do it a little bit differently. Here, David, you can speak about that. How do you get better in guitar?
You've just got to noodle away. You're quite right, Bruce. So I ape various players, Jimi Hendrix, Gary Moore, or the guys at Metallica, and then you just sort of add your own little nuance to it. Yeah, and that's what we're doing here. That sort of common theme of when we rap about trading, Bruce, it's about copying a little bit what I do, copying what John's doing, what you're doing, but also finding your own your own technique of applying that. I think music's a good analogy.
Oh, that's why I called you up.
Cheers, buddy.
I think the other thing to consider here is the current market trading environment. We're trading in such impulsive moves that unless we have that impulse, like what he's demonstrated here, that's the only time I really want to be in it. Where you were talking about, Bruce, I could see that doing, years ago. But in this trading environment, I'm looking for this push, and I want it to keep going, or I want to get out. So I think the other consideration is the current trading environment. And, we're news driven, we're fear driven. And I think it's important to keep an eye on these impulse moves. And when it's not there, it could impulse the other way really fast, and it can hurt a lot. So that's why I like to see everybody trading in one direction. I kind of get in behind them. So that's all.
Nice. Yeah, absolutely. And that's another nuance, John. I mean, like,
it is
market timing, and we're not just talking about time of day. We're talking about the environment we're in.
Yeah.
And you got to adapt.
Yeah.
And God, I just remember some months ago, you were adapting by getting up at like 2 or 3 a.m. Or trading other markets that weren't related to some of this volatility. So that's how you adapted. Different ways to kind of look at it. Really, really good points. Vinfra, anything else? I'm sorry, John.
No. Sorry.
Go ahead. No, sir. Go ahead.
The only thing that I'm not very happy with the risk and reward ratio, because yes, I'm 3 points. Okay, With the volatility, it can work and it cannot work. But I did not have the time to move my stop. It's so quick.
Yes.
I enter at 9:06 and I'm out and before night 9:08, something like that. It's so quick that I did not have the time to move my stop. But if I did, I will put my stop just before at the top of the when you see the four arrow, Bruce,
I'm sorry.
from my stop to the right, the rectangle stop loss, the arrow, yeah, the yellow arrow,
Here.
number 4. No,
Oh, number 4 here.
the-
Yeah.
The one that I drew.
yes,
Yeah.
yes, I will put my stop there if I did
Right.
have the time,
Oh, yeah.
but
Yeah.
I did not.
Yeah. Well, just so you have your finger on the button and you can get out if that move to the upside pauses, if it stops, starts to reverse. My point was that you don't want to take it all the way back down to 72. That's all. Okay.
Yeah.
All right.
Thank you.
Let's move on.
Okay.
Can
Thank you.
He has
That's a
more
really
here.
good point, I think, Vinfra. I think that's in replay mode. I just want to say, if I could, just what I was trying to do in replay mode. With this setup, it's a little bit, and Bruce, you have created some really good replay files for us here because these structures have been very consistent. I haven't got through them all yet, but they a lot of them look like this, and you've made it, and it looks really really good, really clean, and it really helps us to be able to get our profit target, and we and so let's say for we have a consistent take profit, and we have a consistent stop loss. And so what I've been doing, let's say 20 ticks, I've been trying to in these replay files, I usually set my stop loss and take profit to 20 ticks, let's just say, which is 5 points in the ES. So this structure is given us defined risk. So if we were to draw a rectangle around the structure, and 5 points, let's say I entered at 67.74, and 5 points below that is 69. Well, 69 is way down there. I can tighten that my normal 20 tick up to the bottom, about a point below this structure, which is giving me, yes, right there. So if I draw a line right there and I move my stop up to this point, but I keep my take profit at 20 ticks. So what's 5 points up above 74? 79. Yeah. So if I just kept it at 79, exactly kind of where you took your profit. Yeah, right there. Well, I'm being consistent, and it just so happened to be kind of lucky that the liquidity was there as well. But even if there was liquidity front running my exit, I wouldn't move my take profit. I would still keep my take profit, even if it's higher than the liquidity, just in replay mode, just so I can see if I can get that 20 ticks each time. But see, what I did by moving my stop up is I reduced my stop. So I reduced my negative R factor on the trade. So if I did take a stop, it wouldn't hurt me as bad. But what this helps me do in the replay mode is I know that I can still get my 20 tick take profit. How often can I get it? How many times am I doing a replay file? Well, each time I do it, I'll get an idea out of how many times I do a replay file. I'm able to get that 20 tick take profit. But in each replay file, I'm also, the way that Bruce has kind of structured these low volume pullbacks, a lot of times I'm almost very often able to tighten my stop and reduce my negative R factor, or reduce my negative, how far the trade goes against me. But if I'm able to still get my take profit, this trade is almost always going to be skewed in my favor. But just, I think that you brought it up, Vinfra, and I think it's a really good point. Because if you're entering and the liquidity is front running your exit, it does skew your R factor, and that's a really important part. But let's just say you
Okay.
keep it at 20 ticks, at least you'll know if it's able to go 20 ticks, even if liquidity is front running it. And that can give you confidence. Like if you take this in real live trading, and you have liquidity kind of front running your normal, let's say 20 tick take profit, you can have some confidence in holding that up to that 20 ticks, because you see that they're stacking that liquidity at 67.80, 67.81, and 67.82. So you don't know, like it could go up there, but it could also go up to 67.84 as well. So which one do you put it at? Well, if you have a little bit of consistency of like, okay, well, I'm usually able to get a take profit at 5 points, I'm just going to leave it there and see which one it hits. And because you've skewed your stop to make this R factor work for you in this case. And that's kind of the nice thing about these low volume pullbacks, is you're able to skew your stop loss to where it works in your favor, where if you do still take a stop, you can still take 5 of these or 100 of these with your stop skewed, and you still pull out a good risk reward in your favor. And you know this because you've done it 100 times or whatever,
Yeah. Thank you.
Let's see.
All right, Chris, can I elaborate a little bit on what John just said? As far as the stops,
Yeah.
I just wanted to say, John brought up a valuable point, and so did Ventura. If the trade goes and you don't get a chance to adjust your stop, and it doesn't hit your target, this is just for everybody that's in the pilot program that's listening. If you see it pause, then it rotates, and it starts to come back down or go against you, that's your sign to get out immediately, because those are other buyers that got in or sellers that got in when you got, that's exiting their position, which triggers it to uh, escalate down, and all of that will go against you, and you'll be giving back profit. So as soon as you see it rotates and it starts to go back down, don't be hopeful thinking it's gonna go back up. Just get out. You can always get back in the trade. But I just wanted to bring that point, since John said, once it paused, people get nervous and start exiting their position, which is gonna make the trade start going against you, and you start giving back profit. That's all I wanted to mention.
Okay.
Yeah. Okay. Thank you.
Let's see. I have one very small comment, and David, I see you put an image in. Vinfra, just so there's like I would go back and retrade this today or tomorrow. I know it's late where you are, so maybe tomorrow morning.
Yeah.
With all of these things in mind, and find out, like David, playing guitar, and just figure out like what kind of works best for you. There's one more to add in, and that would be to trail your stop, or your take, so you don't hit your take profit. And because we don't know, like DNT, if it's going to come here, 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 or even here, right? So as soon as it breaks this level up here, then actually your stop is still going to be down here, to be honest. Once it kind of does something here and then breaks this level, now you can move your stop up to somewhere around here, or here, somewhere in that area, that would be, you would take profit here, but it wouldn't be if it came back and hit you. So it's something to consider as well. I like what you did. You took your profit right in front. You're out. It's a solid way to build confidence and hit singles. It's just another thing to look into as well. So I don't know if David, you had anything you wanted to mention.
Not so much on the stops of that. The charts I put in the chat, Bruce. All this was showing was labeling my point about how I draw throughout the day. Now, you're probably all going to say, we do that, David. You don't need to tell us that. We do that. You've got the oil chart and there's a 6E. Those thick lines, that's what I'm drawing as I'm watching the market, Bruce, and trading the market. The red circles are what I just highlighted very quickly to John's point in terms of the impulses, trading the news, wherever it is. And if you just look, what I'm looking for, I'm looking for the above the average volume, let's say, what's going on. And that's just eyeballing that and thinking, okay, something's hitting that. I've got the news squawking away. On off I trade. So if you're not doing that, have a go at playing those lines, and it's just surprising of how effective they are. Really, Bruce, you know that as well as me, and that support and resistance channeling away and things. So yeah, all my charts are pretty messy like that, as you've seen. Yeah,
I really like it, David. It's like guidelines, to your kind of bigger picture structure, and
yes.
you're putting two things together: price movement and volume.
That's it.
And
yes.
It's super strong.
Yeah. And as you can all see on my icebergs, again, you've seen this before, Bruce, but iceberg stops and everything else, I've got the font and the text and everything as big as I can get it. So I can see it.
Yeah, it looks like it's on sale or something.
Yeah.
Okay, I think we beat this one to death. I think we can we move on.
Yeah.
Okay.
Yes.
All right. So let's see. And that was, I think you got another one here, but John, is there something important that you wanted to mention in here?
On this one, I did. If we could just look at this
sure.
one, he has several, but there's a good point in this one.
Okay.
Vinfra, what I did, you have two trades listed on one chart, and best practices, it's actually best to annotate one at a time. So even if you just make a copy of your chart and then come in with the second trade, label that. So what I'm showing here by my numbers is just the first trade that you took here. And I think it was important on this trade, the low volume pullback trade, is that you're seeing the structure, you're seeing the break to the outside, but then you entered before really you got the pullback into the low volume range. Okay, you agree with that? Okay, and
yes, I was ready with my hotkey.
Okay, so it was a mistake. That's fine. Okay, but it was a good setup, and it's remarkable, Bruce, how much this low volume pullback comes into the market. I mean, it's all the time.
All
you could
the
do
time.
20 of these a day. You know? So that was the point. I didn't know whether because he was so brilliant in his other trades, I thought that must be a slip of the mouse key, which we all do. But the point is that he labeled the low volume pullback, and the market basically came down to it and made a little bit of an exhaustion, a stop run to the downside, pushed it to the downside, and then reversed. And that really would have been your entry there, or you waited for the push with the volume. But that's all I wanted to say. I just wanted to clarify that entry. Everything else is
this entry was a mistake for me. A mistake because I was with my my finger on the B.
Yep, did it myself.
Yep. I was waiting for the pullback to occur, and I saw the entry. What?
Yep.
No. And then I realized this. I let the trade go because I know this impulse move, and so I decided to let the trade go and form, and you see that we are there on the left of the 4 there. I said I push one comment. The better entry should be with the arrow on the left.
With the
there.
Volume.
With the volume.
Yeah.
And not do a mistake with a finger. I don't know what I've done with my finger, but it was on the B, ready to go, and I triggered the B, and it was a mistake. But I decided to let this trade go because I recognize the impulse move. We have the horizontal structure. We have just later, in a few seconds later, the pullback that occurs. So it's completely idiot and silly to stop this trail in this case. Because I recognize the elements that I need to go in. So I let this trade go, and I do a second one more a little bit more clean.
Well, so, I think you're recognizing the trade perfectly. Really nice, because, I've got 5 of your trades here that I reviewed, and they were very consistent. And I think the thing that you're most consistent with are your profit targets. You're not looking for grand slams. You're looking for the most consistent way to generate a profit out of these markets. And that's by looking at the greatest amount of liquidity that's in the market, defining your targets. And then you just front run that a little bit. I think that's fantastic. A lot of people that come into the market, they want to make 40 and 50 handles. And I think you get your 10 and 15, and that adds up quickly. So very good in that regard.
Very
so really love what you're doing, the work that you're doing. Keep it up.
Thank you.
Bruce? Yes, sir.
Let's if you have a quick comment. I have one quick comment, but let's move on maybe to the next one.
Yep.
Okay.
Yep.
My only quick comment on this is Vinfra. This is, I think, really important. Is the last time you were up on the stage a week or two ago, we had all sorts of comments on, well, we can't see the chart, we don't know what you're looking at, there is no consolidation. You rectified all of that. This is now look at the feedback we can give you, and look how much you've improved, right? So this is a big part of the pilot program. Is God, we can go back to maybe David's guitar playing again. Is you constantly, what did I do wrong? How did I mess that up? Let me try it again. What's the solution, right? How do I find a solution for that? Let's fix it, and then let's get good at it and overcome the problem. And a lot of times it's just through repetition on that, with intent. Anyway, nice work, guys. If any other, sorry,
it's my daily process.
Excellent.
Excellent.
Yep. Excellent. Okay, if no other comments, then we'll move on. Let's see here.
I was going to say the same thing you just said. We talked about zooming out. It's exactly right. Yeah, it looks good, Vinfra.
Yeah. Let's see. We've got this here.
Here?
Is this? Who is this anyway?
This is TD.
Oh, TD, and he is not in.
That's too bad. He had really some good charts.
Well, he kind of comes in later sometimes, so we'll keep an eye out, and we'll see. T James is not in. Okay.
See him yet?
No, don't see him yet. So let's see.
I see Daniel.
I've got somebody.
Somebody reviewed Laura, didn't they? Moby or
maybe. I wanted to go over Nan. Nan has been, I've really been astounded by his work, and Nan will invite you up to the stage here. Okay. And actually these charts are a little different than what you some of the things I was really astounded by, but I really like some of what you said in here, and I'll let you speak. But there's something like what I think your superpower is being able to look at bigger picture structures, understand them really well, and be patient. And you're waiting for it to kind of work out, and just when it works out, then you get in. And then, I mean, if you can do that, you're trading on another level. You can make so much money um, trading that way, because those bigger picture moves and structures, when they work out extremely well. It's not easy to do. So really, really great work. And I thought maybe you had put this in for the pilot program, no, I'm sorry, in your spreadsheet. So maybe I thought we'd go over this one. Should you walk us
Can
through?
you hear me?
Yes.
Okay. All right. Hello, everyone, and hello, Bruce. Appreciate being here again, and thanks for bringing me up in this. And so this was back on the 7th, just a couple of days ago. And just generally speaking, I zoom out frequently and at least see, the entire day's trading, or the night before the previous day. And once I see that, then I zoom into, the area of focus. So the zooming out picture really, it helps me to see the bigger picture, where we're likely to go and what key levels we're at, and whether it's time for reversal and are there signs of the reversal. And as David mentioned, I do a lot more drawing than is here,
Brilliant.
but I clean it
Brilliant.
up. But the drawing, you've got to zoom out, draw,
Yes.
and do it again and repeat, and I do that all day long, and
Fantastic.
to gain perspective. So that helps me because within this chart here, there are many smaller signals that one could take. And I'll eventually get there. I just would like to focus on the bigger move first, and then perhaps maybe weave into the smaller signals along the way. But on this chart, when I zoom out, there were the 6615 level in I think either the overnight session and or the previous day um, had a multitude of swings at that level. Not a key level as such, and there were not a lot of liquidity there. But one price gets up to that level, we saw the sideways movement, consolidation that seemed to be extended. The break of the trend line told me that, we're ready to go down, but it didn't happen right away. So I drew the structure and I waited and I keep extending the rectangle to the right more and more until it broke there. So once it did that, based on past experience, I know it's ready to move and in which direction it's going to go, and wait for the pullback. I look for the aggressive accumulation to begin. Then we see the layers of liquidity below waiting for it, which was another great signal of the potential for this trade. And there were not just one, there were, as Bruce circled there, 3 and maybe 4. So once I determined that it was time to get in, got in. I drew another structure line coming down to see when that, structure would be broken. And that gives me a signal as to when it's time to get out, because the reversal could have happened at the initial target, which was, that big um, red blurb, going straight across there. Not at a key level, but a 65.90 level, about. But so I stayed with it throughout the process. I keep moving my stops as I had learned from uh, our master stop loss trading his life. So I think I've got that down to a reasonably good science there, how to track it and how to bring it close. And I just stayed with the trade until it got down to that 65.80 and 60. The 80 seems to be a magnet, whether we're going up or down. I've noticed the 80 and 20.
In the 20.
Yeah,
Yeah, I
they're
agree.
common. They're a common magnet. So I knew the 80 was going to be the point. In fact, I held on below the 80. It did go below, and it reversed back up, and I lost some points, but I was happy with the the amount of points I gained there, and I was pretty thrilled with with the down move. The patience really came from when it began and staying with it. The multi-structure has been coming. I mean, I have other trades that I've posted with the secondary structure and waited for that. So, whether, Bruce, I don't want to say it's a variation of the um, textbook trendline and accumulation, but it's one of the things that I had to get accustomed to and see whether it played out or not. And it seems like I'm having some success with it, but that's pretty much the trade in a nutshell.
Wow, fantastic. Let's see. I'm going to turn it over to D&T immediately.
Good job.
Oh man, no, I think it's great. I don't know. Trying to see here. This was prior to, because if I remember right, is this the day the market? Oh no, okay. I think this was Tuesday. So the market just stayed in balance. So yeah, this was a tough day. This looks just like something I would do, where you drew that horizontal structure, and then the market, those buyers like exhaust, and then the market pulls down, and then it pulls back into the structure, and ideally you'd be entering around there, but I never get the best entry. I always get the entry that you got. I always get that entry right there. And yeah, I mean, the initial target, I like your initial target, and I mean, it looks great. I mean, the horizontal structure is something that I usually bring up as well, because it's really helpful. It's really helpful to take this horizontal structure and bring it to, because if you were looking to short, okay, so let's just think about this short from the perspective of a trendline break accumulation short. You have the structure to the left of the trend line, and it's already going into that balance. So if you drew that horizontal structure and extended it to the right, we're looking it to kind of hold this range and then exhaust and then break to show you or tell you that the market is showing its hand, that it's exhausting and wants to go down, and then it pulls back into that horizontal structure and then fails and then goes down. If you waited for the market to actually go down, instead of just shorting in the pocket, shorting in that horizontal structure, well, then you're actually waiting for a little bit for the market to kind of show its hand that it's going down and that it's exhausted. And then after it's broke down, it's kind of shown its hand, and then it pulls back into that structure, and it gives you a decent and then it depends on how you want to enter. You can enter right at 6603, and that will kind of give you an area, if you entered at 6603, where you can put your stop somewhere above that structure, and then you have a better risk to reward by targeting that initial target. And like you, Nan, I always enter around where you did as well, and that's just how it works. But if entering in the pocket, entering in that horizontal structure is tough when it hasn't broke down yet, because you're sitting in that chop. And look how many people got stopped on that sweep at 10:45. They all got swept. Anybody who entered thinking that it's going to go down, anticipating the break. So that's a common thing to kind of sabotage yourself is if you're anticipating it, you're anticipating the break. And I do this a lot myself, and I mean it's very common among other traders. So doing something like waiting for it to actually break down and then pull back into that horizontal structure is something like you did here, Nan. It's very professional. I think it's really helpful, because I every time I used to, you enter anticipating the break and you get that sweep back up. It's just so frustrating, and then you could wind up missing this whole move down. You could wind up missing your trade that you were anticipating in the first place. So just kind of waiting for it to play out really helps with psychology, and it really helps, and it's so clear, and it's the market structure. You're waiting for that market structure to really kind of work itself out, and it's hard to do because patience is something that we all kind of lack, but it's really important to learn and to know, to understand that these trend line break accumulations, they can work, they can move out quickly, they can go in your favor quickly. And if you're anticipating and you enter early, you need to make sure that you get a decent entry that you can get a scale with, because if it does go against you, at least you took off some risk. But if you're entering late and this thing goes against you, let's say you entered at the bottom of the box and it went against you, you're anticipating for the market to break down instead of waiting. Well, you just took a full stop. But at least if you entered where you have your white line, where 6607, if you had entered at 6607 to the left, Bruce, to the left right there, if you had entered there, then at least you can probably get a scale down at the bottom of that structure, 6,600. And then it went against you and then you took a stop. Well, at least you took off some risk. But if you're patient and you're doing it kind of how I would hope to do it, the way that I would want to do it is to actually wait for it to break down first and then pull back into the structure, just like you did, Nan. And that's all.
Thank you. All right. Thanks, DNT.
Let's see. David.
Sure. No, nice charting and good to talk this one through. Let me add a couple of things that I sort of see. I first of all wouldn't enter where you did because I haven't got the volume, Bruce. I'd be looking more for round about. I think it says 1302 on the screen, so a little bit to the right when the red volume bars are exactly. That's where I'd be looking for. I echo everything DNT saying about the structure, the weak pull up. Got it. But I'd be looking for a little bit more volume to help me down to you've got that initial target that's come in and the lower liquidity. Yeah, get all of that. The other key thing on this chart for me, Bruce, I know it was about what David would be trading. That's on the far left. And that's, exactly. There you go. Look at that there. The angle of attack. We've got the volume bars below on the bid. I can see you did take a long that didn't quite work. Thank you. You got the volume picking up, but look at that angle. It's thank you. Look at it. It's screaming to get in. You got in a bit later, but you could have gone in 5-6 points below that. And importantly, when the price is picking up at pace, as Bruce has rightly got the arrow on, that's when that liquidity came in below as a bully. Exactly. So that I appreciate it's a different trade to what we're talking about, but that there is a lovely trade signal. And before that, like we had on the previous charts, Bruce, we've got those green volume bars already starting to pick. Thank you. Already just giving you some nice little tells, and we're getting the higher lows that you've got your line on as well, Nan. So fantastic. But look out for that. Yeah, there it is, Bruce. That's what I was going to add to everything else. Thank you, sir.
Fantastic. Over to you, John.
Two areas that you just talked about, before and after, are the trades, and everywhere in between is just garbage, right? He's highlighted that structure after the move up that David just talked about. And then when volume came into the market and took it down a little later after Nan took his trade. And then, like I say, everything in between is what I try to avoid because there's no volume commitment. You know, and it's like I was talking about earlier, these markets are so impulsive that if you're just sitting out there in no man's land right before 10:45, this thing will spike on you and it can hurt really bad. I've been caught in those moves, and that's why I'm focused on these impulse moves, just David has just talked about, and what you just highlighted on the screen with the delta bars. You see volume coming into the market, you can trade with it and come up, and then the same way on the way down. So I concur with the two things that David just mentioned, and it also allows you to define where you don't want to trade. And he did a great job identifying that structure in there. That's just Chop City, and you want to stay out of that. That'll kill your account in there.
Big time. Well said, John.
Yep.
Let's see. Trading is life. Any comments?
I'm here. Yes, I do. I just agreed with the previous panel that went before me. I think he entered the trade perfectly because after it broke structure, it pulled back. Then it pulled again, and you see the little green dot showing exhaustion. Then he entered, and he trailed his stop perfectly. I really want to talk about the exit because this is what I was talking about previously. As you see, Bruce, as he trails his stop, and man, as you see, as price got to 65.75, and then you see started rotating down there. Once it started rotating, then it crossed your trend line. As you can see, that was the transition from sell side to buy side. This is where that was your cue to get out. You didn't have to trail and let the trade hit your stop loss before and give back some of the points like you said. This is what I was talking about earlier. As you trail your stop, but you can be proactive. As you can see, it went to 65.75. It pulled back, went down, experienced exhaustion. Then it crossed your trend line. Then you see the buyers start stepping in. That was your cue to get out the trade immediately. And that way you wouldn't have had to give back as much points as you did. But other than that, I think you should just stop beautifully. I think you entered. I would have entered because I see your volume was there. It pulled back. It exhausted. It did not go back into the structure. So I think it was an excellent trade. Just the fact that you once the transition happened, you just let the trade continue going against you before and let it stop out. You should have got out immediately once you saw that happen. So back to you, Bruce.
Yeah. All good points, guys. And I think John had mentioned it now twice about know your environment. And I think it's super important. I mean, we always are adapting. If you don't adapt, you're going to get hurt. And if you get hurt a lot, you're not going to be in the game. So find something that works. And you know, John tried a bunch of different things, and now he's also probably been highly influenced by David with these.
Oh, we include each other, don't we, John?
So
That's correct. That's correct.
So you know, and David's aggressive behavior. And it's great. It's great. I mean, and that's why we're here, is to learn from each other. So really all good points there. Tomi, I wanted to mention something for Tomi, and in fact I'll invite you up to the stage, and with this trade here, because everything Nan said I totally agree with, and it's beautiful what he has, marked up here and said, well, the trend line broke, but I didn't see this yet. It didn't really look great. In fact, look at this area in here, right? Look at this area in here. Now, this is what was interesting is, even though this trade worked out, I'm not really seeing the transition from buy side to sell side. I think what Trading His Life mentioned is totally true. From sell side to buy side, yeah, you're starting to see it over here. But I don't really see it up in here. And that makes it more risky. Now, it worked out beautifully. And I think there's, it's this selling in here in the break of structure, right? A retest up in here, and it still wants to go lower. And I think, I would take it. I would look for it. And even though like this isn't that great, I would assume that it would start picking up probably around in here, and it didn't. It chopped again, and then it picked up down here. So it's a weird one. However, and you can see how long it took to work out, right? So and the patience it took to stick with this or see this or whatever. But Tomi, I just want to mention this for you because not to be confused by this in here. This is a little more advanced with this working out. And it's because of all this noise in here and the exhaustion, and then the break of structure with some selling. It's going to be more like stop runs and other things happening in here. But we really want to see basically in this area, in here, we want to see it go from buy side to sell side. And if we got that, then this would be a great example of the trendline break accumulation. So please guys, don't be confused with this one. And I think it's important to mention that. And in fact, we can segue over into one of your trades because you brought it up, Tomi, in the pilot program. On a minute. And then Laura gave you some really good feedback, and I totally agree with Laura. You had, is it this one?
Yeah, I think so. Yeah.
Okay.
I think the other one. Yeah, that one.
Okay. Right. So, and this is what we want to really keep an eye on. So that last example is kind of an anomaly. So look at as David would say, look at the angle of attack here, and look at this volume. This is the impulse move. This is the chop. This is your other impulse move in here. Even though it's hitting these areas of passive liquidity and they're getting filled, and then you put in a very aggressive trend line in here, but we don't see this transition yet. So, and in fact, it's the opposite. It was like your other trade last week. It is very much the opposite in here. So this is actually more like the low volume pullback and starting to pick up again. So we're starting to look for higher highs and higher liquidity wherever it might be. So I think I would mention to when you're studying these and when you're going back in replay mode, continue to focus on the volume in here and that transition. That'll help you tremendously. Also look at some of these impulse moves and the strength behind some of them, because it's really telling you, even though there's lots of liquidity getting filled passively, we don't see the turnaround yet. We don't see the aggressors. Okay, there's a pocket of aggression here. It's not much. It's not enough. And this is a little bit better here, but we really need to see the transition take place. And then once you see that, it breaks structure, and you see that aggressive volume start to come in, then you got something. All right. So I hope that was helpful for you, Tommy.
Yep.
And maybe you want to look at some of the. I mean, you've looked at this one now for a while, but it's gonna. I personally feel it's going to help you tremendously if you can make the distinction between this trade and the trend line break accumulation. And then you're gonna, because then you get really good at this, and you're gonna be like, nah, this is not a reversal. I'm taking it north. You know, and you'll get really good at it, and you'll be like, I got it. I know where these traders want to take it, and they want to hit this high liquidity and maybe even higher.
Yep.
Okay, enough windbagging from me. Let's turn it back over to John with any comments.
No more comments from me. Nope. You covered it. No, sir.
Anyone else? Any comments on this?
Yeah, sure. If I can chip in, where you've got trend line break box, Bruce. The move, yeah, that's it. We go up, and you've heard me say it many times before. There's that tease there. Expect that tease. Do not think that the price, when it starts to pick up, it's going to go into that liquidity. Sure, you're going to show me loads of charts that it has, whether it's on going up or going down, but more often than not, it gets close. And Scott used to talk about this years ago, and he probably still does, Bruce. And then it just comes back. They yank lots of people out. So anticipate where you're charging up, you've got liquidity. Look for that little tease, exactly that tease, and there's some liquidity around there. You sell in, as you say, you haven't got the volume bars, then we're buying. And as soon as we start to buy, then that's very likely. That's the push. That's the push. I can't talk American football. I can talk UK rugby in terms of various moves, but that's that move there on the football pitch. Bruce, help me, please. You probably understand.
I'm not following you, David. You're talking about when it breaks the small structure here?
Yes, okay. Because we've had the tease. We've got the upper blood that's still there. We've pulled back a bit. And then I'm thinking, okay, we're now going to have that charge. Where's my signs for charge? It is high risk, but we're starting to buy. And then I'm thinking, yeah, okay, I'm gonna get involved now.
Yeah. Perfect. Okay. I don't know. Trading is Life, DNT. Any comments?
Yeah, I have a comment. This was a short position, right?
Yep.
Yes.
Yeah. This is the same kind of the same trade you took. We did last week when you said that when you asked like why did the trade went against you. Tommy, if you look, just because it breaks your trend line doesn't mean it's gonna go a reversal. The trade was creating higher highs, and your liquidity is stacked on top. Now, if I would have drew my trend line would have been from the bottom of 68.23. I think that is, Bruce, all the way at the bottom.
Down here, would you draw this one?
Yeah,
or this one?
Right, you got it right there. Yes, and if you draw it from there and take it all the way up, your higher time frame trend line never got broken.
Yep.
So you can see the trade, the structure never broke, and then you got in right at exhaustion. Again, that's what we were talking about at your last post. So when you're doing this trade, keep in mind, just because it breaks the trend line doesn't mean it's a reversal. Look to see where your liquidity is. Like John would say, no liquidity, no target, no trade. Your liquidity is behind you. And again, like Bruce mentioned, look at the transition. Look at the volume. There's no sellers. There's no picking up. And that big volume dot, the last one, that's exhaustion. That's buyers right there telling you They're not letting the price go below that price, below there. And then again, look at the way you entered. Look how small the volume dot is. That's telling you sellers are not interested in taking it down. All of those signs, all of those signs right there, it's a tell telling you it's gonna go, it's a trap, it's gonna go back up. So keep that in mind, okay? Just because it breaks again, I used to do it, and I had a major problem with that. That's when I'm so mad. Shark is no longer here. He doesn't. I used to call Shark all the time and say, "Hey, it broke my trend line. Why is it not working?" And
Good
I
lad.
spoke to John about this. This used to really get me until I had to understand. I had to, replay it again and again and again, so my brain rewired. Like, hey, just because it breaks the trend line doesn't mean it's gonna go that way. So just keep that in mind, okay?
Yep.
Okay. Let's see. Guys, any other comments? I don't know, D&T, if you had anything you wanted to mention. You don't have to.
It's a tough one because because there's a few contextual things. If you're considering, okay, so let's first lay the land. This is a replay file. Oh wait, no. Oh, okay. So this you're trading. This is today, so it's not really a replay file. This is in theory, this is live. So if you imagine, so for context, everybody that's looking, this is like a live trade, right, Tommy? Like I know it's a replay, but you're trading it as if it's live because this happened today, right?
Yeah, technically, yes, yeah.
Okay. So, okay, so that's the first thing. So you're kind of trading it like it's live, and I mean everything that everybody said was really good and it's really helpful. So you have been doing the low volume pullback, you have been doing the trendline break accumulation. You've been doing both. So you started with the trendline break, you've been waiting anxiously for this low volume pullback to come, and you've practiced the low volume pullback a few times. Okay. And this is tough, right? This is tough. So let's get a picture of like what the context, because now we're in the Bookmap Academy right here. We're talking in the Bookmap Academy right now. So Bruce, if you don't mind clicking the second image that I posted of my Sierra chart. Yeah, okay. So Tommy, since you were waiting a while for the low volume pullback, okay? This is a low volume pullback that you shorted. You should, like in context, this was a tough long because it's high risk. This was on news. But right where I drew that little red circle, yes, that was your short right there. Look at the context of the multi-day. So you have yesterday's context, and then you have on the far left, you have Tuesday's ETH where that news event was. Then you have Wednesday right here where his mouse is at. That's a balanced day, okay? And then go to the right where you have the purple. This is our ETH, even tighter balance, okay? And then go to the right where right there, this is where our open, where we try to push down, failed to push down, breaks out of a multi-day balance. So we're talking about a break of a multi-day balance here. And this is where the low volume pullback shines. And don't get me wrong, this was on news and this is very high risk. So if you go to the next image to the left, Bruce, this is the trade here. You get the huge impulse up to the left, and look how wide this structure is. This is almost 10 point. This is like a 10-point structure here on if you draw a horizontal structure. You're looking at potentially trying to find a way to get. I didn't take this long either. I missed it. I took profit at previous day high, and this thing just zoomed way past it, way higher than I thought it would. and then it consolidated, and then you get this small break on high volume. I draw a circle there, and if you're looking to get so Bruce, I don't know, this is not really a great like low volume pullback. Am I right? Like this is high risk. Like, what do you think
Well,
about this? Like,
it's hard to see the impulse move over here and the volume, but because there's a lot of stuff going on in here. So yeah, I mean, look at this cluster down here, this cluster in here. But in general, like, I mean, there's a lot of time in here, right?
mhm.
No, actually, it's not that much time. But the concept is the same though. It's just that this is more it's more complex. There's the squeeze in here, right? And then it retests right to where they are squeezed. It fails. I think it's a great setup, to be honest. But
Okay.
but this is the key. Anyway.
Okay.
Yep.
So Tommy, just to kind of like put it in a nutshell, like this is like we're playing with I don't know. I can't think of a better we're playing with something that's since you're trying to do live, okay, since you're trying to do live, I know this was a replay, but this is where the transition from like back testing in replay, like what you've been doing, and going into forward testing, this is where things start to change. This is like where the hurdle is, like the big hurdle. It's putting things into context. And this is why, like Bruce has mentioned, kind of to go back into replay to study these things, to kind of really understand the transition. So like when we're doing replays of the trendline break accumulation, we really want to see that transition from the buyers to the sellers. And we're ingraining this in us, okay? So like the setup is second nature to us. We don't really need to think about the setup anymore. Now we go to the harder things. We go to the harder hurdle. The hurdle is context now. And the context is it's a breakout of a multi-day balance. And we hit a major area where we might anticipate a counter rotation. Yes, I get it. But that's why like I didn't take a short. Like, are you going to short this now? Like, that's the thing. Are you going to try to see and wait to see what happens, maybe for an anticipating a move to a higher location if you have a higher location target?
I'm sorry, you were right. I take back, it is complex in there with the volume, but what I mean to say, DNT, is this is the impulse move here on this higher time frame. This is the volume you're comparing to what's in here. So I don't have that. I don't really know exactly about this context over here. Anyway, you're right though. Like I take that back, because like in here, this is just you can't read this. I mean, yeah, okay, this is a trap and whatever, like I said,
and
but
it's
like
news.
And yeah, there's a lot going on. Anyway.
So you're playing with a lot of dangerous things here with this with this move. So I know you probably realize that, but go ahead.
No, continue. Go ahead. Yeah.
Yeah, I mean, I don't know. Like, do you have anything to say? I mean, that's pretty much all.
Yeah,
I
I think I could have avoided this by just drawing out a less aggressive trend line, because I think my trend line was really aggressive, and kind of waiting for price to make a lower low, and then kind of after my trend line is broken, I could have entered. But obviously, looking back on the chart, there was a huge impulse move higher, probably because of the news. So shorting that is kind of really risky. And I feel like that maybe if there's a huge impulse move, waiting for a low volume pullback is probably a better idea than trying to short it. That's what I think looking back on this. But as I said before, I think it could have been avoided if my trend line is less aggressive. So I kind of had a really aggressive trend line, and after price went down below that, it wasn't like a really high probability trade. for me. So yeah, probably making a lower low, and also kind of looking at the context would help me in this case to avoid this in the future. I mean, that's what I think looking back on this.
Non mentioned that where Non is like diligently planning or trying to like see the market from an outside perspective. Like, I don't really know what you said, Non, and I apologize, but yeah, zooming out, and this is it. Like this, you've been waiting for this low volume pullback for a while. I remember you asking, and this is a tough one. I mean, don't get me wrong. So that's the issue, right? We have to pick our trades. We have to pick our battles. And do you want to execute on this and take a long in a news event? You can pass. Like I passed, and that's okay. You'd have to really be on your toes, and you'd have to know where your exit is, know where your stop is at, know what your targets are to execute in that. And it's okay to pass on these as well. So it's like you're taking all this stuff from the pilot, putting it into live. I mean, just kind of, you're going to have to start doing some context probably.
Yeah.
Yeah. Good point. Really good point, DNT. Here's that context in your image that DNT's actually lacked. I think was this move here, right? This is your impulse move. This is your, okay, there's some volume here, but it is lower. And then, look where it starts to pick up again. This is the low volume pullback. So this is what we're looking for. And it is higher time frame and contextual. But just continue to work on the basics. When you see the basic ones, you'll be able to nail them. And then the other ones, the context ones, that require a lot more context, you may just pass on them. Wait for a better setup. Why risk the money? Or maybe you trade them and you learn from them, like you're learning here, but you're trading with smaller size. Like yes. a lot smaller size, if you can, or in sim, and trade them and learn from them. Because otherwise, if you don't trade them, it's something that I've come across and waiting for the best setups is you're not learning very much. You have to learn from making mistakes. So take those trades that are rated as a 6 or a 7. Take a lot of them. Just make sure you're risking a lot less.
Yes.
This way, you're going to know what it is, a 6 or a 7. Else, you have no context. You don't know. You thought you nailed it. It's an 8 or a 9 or a 10. It's not. And you have to learn from doing. That's my opinion.
All right.
Guys, I'm a windbag again tonight. Any other comments on this?
Not on that. No, thanks.
Not just Tommy, just open up your structure. When you do your trend line, try to do it from a higher time frame. That way that'll give you more clarity of the trade instead of doing a micro trend line, because that micro trend line will confuse you every time. Just open it, expand the bookmap and do your trend line from a higher time frame, and that way you'll get more of a clarity.
Yeah. Yes.
Hey, let's see. Else is in here. Owen, and PMAG. PMAG, we covered you last week. I don't think a coach had you this week. And let's see it to Boho. And Owen, I don't think you've been putting things into the Bookmap Academy. Into the spreadsheet, but would love to have you up here. And that's another thing I will mention. Yeah, I know, Dan, thank you. Yeah, I had PMAG, but we did PMAG last week. And we got 15 minutes left, so we got one more person, and I'm just trying to find somebody in here. Maybe we'll go with you, PMAG. Taboho, did someone have Taboho?
No, not me.
Okay.
While you do that, Bruce, if I can just grab the mic, there was a question about how long this can take, and I appreciate that. You know, as Stevens rightly said, it's individual. But if I look at what I did, Bruce, you know, you and I'm going to say we always get it wrong, isn't it? 2018, 2019, somewhere around about there. I was a candle trader, like Musa put, although I did have a very crude heat map that you get on Ninja from trading order flow. But all I'd recommend, and I appreciate, Bruce, you'll correct me, this isn't quite the case, but you remember, you know, I was coming to class with you every day of the week, wasn't I?
Yeah,
Every day. I was in, you know, helping out, you know, chipping in every day, going on to the Scott stuff, talking to Scott separately. I was going to school every day of the week on Bookmap to marry up the new tools that it has and how I could then learn that and unlearn some of the things that I had from Ninja. And I'd say it probably took me about 12 months. But really, and now, Bruce, you've got the academy, you've got the pilot program, you've got a whole raft of rooms, as we can all see within Discord. Just immerse yourself. And the other thing, please find yourself a trade buddy. I was very fortunate. I've said many times I had people like Tom as my trade buddy. I mean, I couldn't ask for someone better than that, and other people like Moby and others that we, let's say, we learnt together, Bruce. You know, as well as you, you know, you've been very generous with your time on helping me fine tune how I use it. So those would be my tips for making that transition from candles to Bookmap.
Mm-hmm.
Yeah. Let's see. Right. I guess. Let's see. PMAG. Did you have something here? On a minute. Up. Okay. PMAG. Oh yeah, let's do it. Looks good. All right. So I'll get you up on here because here's a beauty. And you posted this one today. Lovely. While he's coming up on stage here, back to Tomi. First off, Tomi, I need to kind of understand what you're doing because I think you're still trading live and you're doing something in replay that's kind of fishy. I think I have a solution for everybody because everyone wants to trade the live market. I get it, and it's just a magnet of it. But it saps your mental energy and your attention, and you're going to learn at a much slower pace. Anyway, that said, look again at this. Okay, so look at all this liquidity getting filled on this way up here, right? Suppose there are 3 levels up in here, and then it did this, right? We don't see a transition at all here, right? So keep an eye out for this. Even though, you know, you look at it and you go, oh, okay, you know, here comes some aggressors, you know, maybe in here, right? I'm looking to get in. You don't have, you know, you don't have a lot behind you. These guys are still running the show here. These aggressors. Although there's massive liquidity getting filled here, we need to wait for the aggressors that can move it. That's the transition part, and we got to wait for it because this is a beauty for a move higher. No question. PMAG, turn it over to you.
Hey, hi guys, can you hear me?
Yes.
Yeah. Well, I'll tell you what I do first. I mean, before I'm looking for LVP, I run the video, you know, your video on LVP, and I listen carefully to everything you say, Bruce. And then I say, okay, let me try to do exactly what he's saying. And that's basically what happened here. In addition, I had all those questions that Shark, if you remember, Shark, when he put on his chart, you know, questions like, okay, this is the structure, who is in control, buyers, sellers, you know, simple questions. Is there high relative volume, impulse move? And then I just, you know, it's like a checkbox. Do I see that? Do I see that? Do I see that? And that's basically how I figure out that this is going to be LVP. And this is the case here. I mean, basically, once I defined the structure, the question was where exactly the structure is going to break. And then once I identify the structure that's going to break, like I did here, I'm looking for, absorption, which is also a requirement, at least from my understanding, and exhaustion. And then once the structure is broken, I say, okay, what's happening next? The next thing that happened is the sellers kind of took control, but not really, because they did it in low volume. You see the low volume node, and that's basically where I actually decided this is going to be the LVP that I was looking for. And now the question is where to enter. And that's a tricky question because, as many mentioned before, I believe it was John or David, you don't enter because you think that's the right place because the structure broke and you have all the criteria that you need. Enter when there is volume and when there is liquidity. And this is basically what I did. I waited until the volume appeared, and then there was liquidity, and then I entered there. And I said, okay, my target will be the liquidity that you have there on top on the 6905. And I said, okay, this is where I'm gonna exit. Unfortunately, at some point, it actually retraced back, and I said, okay, this
It's that
may
tease.
be.
It's the tease I talk about. Sorry to chip in there. Where
Exactly.
it pulls
Yeah,
back just
and
when you think it's going to go there.
yeah, exactly, David. I mean, basically, this is you mentioned. I said, okay, this is gonna be a bit risky. I mean, again, few points here. I don't want to lose them, so I exited, and that's basically what I did.
Beautiful.
Mhm.
Let's see, John.
This is a great looking chart. Look at the liquidity getting filled there. I mean, it's very clear that the liquidity is all above the current price as it's coming up, very little below it. So you're looking at one dimension up. You get a nice volume node, low volume node where you pull back to, and then you get the break with your volume where you came in. I think it's outstanding. Your risk management is intact, beautiful, and you follow that right on up to liquidity. You get close, take the trade, take the money when you get close. Don't be a hero. And very, very nicely done. But I just love the way this picture looks. It gives you the quality of the trade, the liquidity, the presence of the liquidity, and the volume trading to it. And that's the picture I want to see to participate. If I don't see it, I'm not interested. So really a lot of great things about how this looks. Bruce?
Thank you.
Yeah,
Yes, sir.
beautiful. It really is. It's a beauty. Let's see. David, did you go already?
No, I haven't.
Oh, well,
No, it's a
please.
damn off. Yeah, here we go. Monday morning quarterback. Yeah, here we go. Yeah.
He's getting worse, David. He's getting worse.
I am getting
by
worse, aren't I, really?
every-
Yeah. If I go to sort of like 1332, we can see the broad structure, Bruce, that we talked about on some of the other charts, that sort of higher low that's giving you, yeah, if you've got that little dip down of the red bubbles, you could actually start to draw an upward, yeah, a little bit, yeah, lower, yeah, and you can draw a trend line across there. So yeah, my theme today, you should be drawing lines here, and then that volume picks up at 30 and 34. You can draw another line up there, bang, again, the angle of attack, so we know it's happening, as John talks about. She said you got the chop, and then it picks up again. And as I rudely interrupted, you've got that little tease as you get towards the 905 level. You've got that little pullback. So be thinking of that. And I know a lot of you have talked tonight about it, just front running where your exit is. You make sure you get out and you take your points off the table. Lovely.
Yep.
Lovely.
Yep.
Beautiful. Trade with the volume, as we're all saying.
Yeah.
Yeah, beauty.
Thank you, David.
Let's see. First off, apologies to Teboho. I see that Moby did cover you. We might be out of time, Teboho. You've been putting in great work. So I will put this into the chat, though, his file, so that you can check it out. Yeah, if we have a moment here, we'll go. My apologies on that. But Since we've got this one up, I want to have all the coaches give a round on it. So trading is life.
Yeah, yeah, PMAG. I think this was a beautiful trade. I agree with John. Um, just be mindful, like I think I mentioned this to you before, where the difference between the impulse move and exhaustion. And far as your take profit, that's beautiful. You didn't let the trade go against you too much. Beautiful. You didn't let the trade go against take profit in front of liquidity. Like 2 or 3 ticks in front of liquidity. So that way you'll just take your money. Because exactly. Just have it in front of liquidity. Because that's where most people usually exit, and you don't want it to get up there and then start going against you, and then you start giving back some of your wins. That's the only I have to say. I think you executed this trade beautifully. You trailed it beautifully, and that's it. Back to you, John. I mean, Bruce.
DNT.
I don't really have anything to say. I mean, we kind of just talked about this. I think it was the first trade that we talked about. I don't really remember, but it would look just like this. I mean, it's a textbook low volume pullback, and I already said what I wanted to say about it earlier, and the same applies here. I mean, this entry is like what we John and David and Bruce have been talking about. And the stop loss, I think, follows their structure very, very nicely. And I think if you entered here and you put your stop up, I think that's exactly where these guys would have put their stop too. So I think this is great. It's a breakout trade. It's a breakout trade, and when you do take that breakout trade, you're hoping to go with momentum and hoping the momentum is going to carry the trade. So, I mean, move the stop up. And I mentioned what I mentioned last time on a similar trade at the beginning of this, and about entering a little bit lower, like maybe around 95, and being able to place your stop like maybe a point below 92-ish. And that's an alternative entry. So I think everybody here agrees, though, that that entering where you entered is probably the way that I think everybody agrees on that. I like to look at the alternative entries but this one probably would have been tough because I usually try to look for sellers attempting one more time to push it down, and you get a large sell bubble, and then when it breaks above that sell bubble, then that usually, and it's usually also the break of this little trend line that Bruce just drew as well. And you see the skew on the bid, like that's a lot of liquidity on the bid. I mean, it's a great trade. I think the liquidity on the bid really is kind of flashing there. That's also a really decent indicator. So like if you were looking at 95 for an entry, I mean, that's probably where I would be looking at maybe 96-ish. But I know like that's not really the consensus here for the entry long. But if I did enter around 96-ish, I'd be able to put my stop safely underneath the structure here.
Yeah. No, good. If I chip in on the money side, Bruce, theme we've had over the months, or dare I say the years, you master these and you can just run, John, I mean, say you and I do this a lot, you run 2-3 contracts on this. You can just do that once a day, twice a day, depending on what your income wants to be. That's it. That's all you need to do. All you need to do.
Yeah,
as you said, John, you don't need to be doing the 40-50. We all love the 40-50 handles, but you don't need to. This is a lower risk trade. The volume is with you. You got liquidity above. Just run 2-3 contracts on that. Take 5, 6, 7 handles, whatever it's going to end up being. Do 2-3 across that. It can be one and done. And I mean that rudely and politely, John. Help me.
Yeah.
Catch me.
No, absolutely. And you limit your exposure time in these markets. I think that's essential. You map out your trades based upon the volume and the liquidity, and you keep your exposure in the market limited. I want to be in this a heartbeat or less and be done with it, because you never know what the next news item is going to be. And it goes back to recognizing what kind of environment you're in. And I think that's the best way to attack it right now, is to see these kinds of trades, a low volume pullback with liquidity clearly mapped in front of you, and then you see volume coming in, trading up to that liquidity. You get in, you get out, front run that liquidity a little bit, and then wait for the next one.
Very true.
Yeah.
I just wanted to add, that's kind of funny you guys mentioned that, you mentioned that, David, because I was thinking about this last night. Like, you really don't need to be trading left and right, and anybody that's like over trading, right? But be a sniper, be a like you're hiding, like you're waiting in the bushes, waiting for your setup. Context aligns, waiting for your setup, and then the setup comes and it shows its face, and then it shows its neck, and then you hit it, and you only need it. You only need one. Like, you could be done, and this could make your week. Like here where I live, it's pretty cheap living. You don't need a lot of money to live here. And think about it like that. Like, you don't need to be here over trading. You just wait for the context to align. You set up to align, and once it hits, you hit it. And the way you trail your stop, like this breakout trade, these great coaches here were talking about just now, you'll take a small stop if it went back on you, and then if you waited again, not fall into temptation of revenge trading or anything like that, but you waited again for context to align, and you waited for your setup again to align, everything that Bruce mentioned in the beginning of the stream, and you execute when it appears, then that would make up for the loss that you just took, and maybe your week again. Like, it's just beautiful. I think it's funny you mentioned it, though, because I was thinking about this last night. Like, there's no need to overtrade. Like, just sit, wait for the context to align, wait for the setup, and then just hit it.
Yeah, no, wise words, fella.
Yeah, absolutely. Thanks, guys. PMAG, really, really, really great to hear. Like, you went back, you studied it, you went through the video. You've got the community, you've got the chat room, you've got other replay files. I'm going to start having afternoon webinars for pilot program members, at least 2 or maybe 3 a week. We'll start with that, and we'll see. Now they're going to be shorter. They'll be kind of like these sessions here, but they'll be different. We'll go over how to take advantage of the pilot program, and then there'll be more in depth on the kind of data, the journaling, etc. So that'll be another resource for you guys. But way to go, way to learn, and way to apply it right into the replay file here. And then you just got feedback from 4 different coaches. That was fantastic. 5 different coaches. So, PMAG, any questions on your side?
No, I think the only question is more or less where DNT lives. I mean, you don't need to give me the exact location, but where I'm looking for a place where life, the cost of living is cheaper. So
I thought it was cheap until I heard somebody mention that it's like not that cheap. I live in New Mexico, so
okay.
It's fairly. I thought it was pretty cheap, and I still think it's pretty cheap. But it's unfortunately, they say it's like the worst place to raise a kid, and I'm raising a kid here. I don't know. I mean, I'm alive. I made it. I think.
What's your property taxes like over there? Are they high?
Don't look up the statistics of this area, and I think you'll be happy.
Guys, really great session. Thank you all, coaches, with all the great comments here, and people who've made some really excellent markups as well. Taboho, I'm still kicking myself. I'm sorry, we're out of time. We will get to you next time for sure. You got a great looking chart there, and I will put that in Moby's link in there into the chat in the Bookmap Academy chat so that you can look up and see what Moby feedback has for you there. Let's see. I think whose turn is it this time? Is it DNT?
Not me.
Okay.
Yeah,
I think
not
John, you went rather.
Not me. No.
Yeah. So it's between DNT and Trading His Life. Who's gonna?
DNT can take it.
Okay, DNT, you're up.
I'll just end on what we just talked about. You don't need a lot. Like the markets. The thing is you have to realize like this is a business, and if you manage your business, properly, you could make a decent living, and it doesn't involve, and it has nothing to do. I mean, it does have everything to do with emotions and all that stuff, but if you can get past, like, that's the ground level, that's the very bottom. You got to conquer your emotions. You got to conquer these things that drive us, and you could get past that, and we continually face it every day. We have to face that demon every day. But if you can learn how to conquer that and learn how to just stick with what Bruce opened with at the very beginning of this webinar, it's the 4 things that we always talk about. If it's our playbook, we can stick to our playbook, and we know our playbook has an edge. It's just sitting, drawing out the context, and just waiting, and then waiting, and not getting triggered, and just execute on that. And then you can make a decent living. And in my opinion, that's what it's about. And everything else, I think, is just an illusion. Try to just make a living first, and and go from there. And hopefully it works out for you.
Beautifully put.
Right. Excellent. Thank you, guys. Thank you, everybody.
Well,
And we will catch up with you next week. Same time, same
Look forward to
channel.
it.
Thank you.
All right. Take care.
Cheers, traders. Take care. Bye-bye.
Thanks, coaches. Thanks, everybody.